Hello, everybody. Welcome to another episode of Beat the Market. Today, we are going to talk about a very important company which has been revolutionizing the cloud communication, and it has been helping the businesses to better interact with their customer through various touch points. During pandemic, there has been rapid digitalization of businesses, and it has changed a lot of consumer behavior as well as communication. Pandemic has led to change in consumer behavior in such a way that it will continue even after full recovery. Some of those are related to telehealth, contactless delivery, distance learning, as well as mass notifications. And I think this company is poised to benefit from this change in consumer behavior and has a huge growth in front of it. This company is engaged in cloud communication platform as a service. So the name of this company is Twilio. It's no strange name to anybody. This company has sold off recently, and it's getting to the price where it's getting very attractive. Twilio has been remained a leader in cloud communication platform as a service for a long time and helps business connect with its customer through various touch points, through text messages, videos, and audio. Let's discuss about Twilio's business strategy and their strengths, and if there's any business risks, and if it's a good company to invest at this moment. So as I discussed, Twilio has long remained a leader in communication platform as a service to help businesses better connect with their customers. Their platform helps businesses to communicate with their customer through various touch points, SMS, voice, and videos. So they help support business function like marketing, operations, and customer support. And they have three layers through which they provide their services. One is engagement cloud, programmable communications cloud, and super network. And now they have entered into customer data management through acquisition of SendGrid in 2020. We will discuss in detail about each of these services. So the three core layers that work together for customer engagement. One is super network, as we discussed in previous slide. Through super network, Twilio has built a strong network with the different network carriers across the globe, which helps them deliver the messages or provide the communication fast and low cost. And they have 28 data centers worldwide. So through these 28 data centers, Twilio software route interaction by most optimal route from speed and cost perspective. So Twilio through this network has generated tons of data points which help their platform to optimize for the best route, the best cost-effective route. And this is very powerful for Twilio. The second one is the programmable communications cloud. It enables access to easy to use application programmable interface that developers can use to embed voice, text, email, and video capabilities into applications. Companies can develop such embedded communication application and website that will help them better connect with their end customers. The super network is a software layer which enables its customer software to communicate with connected devices globally. And the last one is the engagement cloud. So through engagement cloud, which is contact center software basically, and marketing campaign, and this allows large scale marketing initiative by email. And this is through, this was facilitated through the acquisition of SendGrid. Most recently, Twilio has acquired SendGrid, which will help them enter into customer data management. This will help companies enable businesses to collect first-party data on the consenting customers from a wide variety of channels, which will help improve customer service experience and drive loyalty to the business. So that's a good acquisition from Twilio. And the most recent they announced is ZipWhip acquisition for $850 million US. It's a messaging platform which has gross margin accretive businesses for Twilio. And the Twilio is a very strong business, and it boasts of 97% retention rate, which is very high. And they have very good companies as their customers. That's Facebook, Uber, Home Depot, Nostrum, Netflix, Salesforce, and Twitter, to name a few. And at the end of 2020, they have around 221,000 active customers on their platforms, so which is very good for the company. So Twilio has a huge growth in front of them. Most of their businesses, around 73%, is in the United States, and only the rest is from international. I think that's great opportunities for international expansion, and they have been investing a lot in expanding their international footprints. Strategic acquisitions, they have made a lot of good accretive acquisitions for their business. SendGrid, for example, we discussed help with the engagement cloud for $2 billion in 2019. Segment, most recent in 2020, for $3.2 billion for customer data management that will help them provide better customer experience and loyalty to the businesses. And most recently, ZipWhip for $850 million. As I discussed before, there have been rapid digitalization of businesses going on, and I think that will be very good for Twilio, because they are the leader in cloud communication platform as a service. And this, due to pandemic, a lot of businesses learned a lot, and I think to better engage with their customer and drive efficiencies, this digitalization will continue. Next one is they're trying to get enterprise customers, and normally their business is online, but they have been building some traditional sales force to get enterprise customers. They have been accommodating their platforms according to enterprise customer needs, for example, compliance, administration, and security features. And the last, they have very strong balance sheet. You can see Twilio has very strong balance sheet. They have cash and equivalents of $5.7 billion, and they have been increasing their cash equivalent consistently over the years, which is very nice. No convertible debt. Long-term debt is 1.2 billion, but very low compared to their cash and cash equivalent. So Twilio has a moat. What it means by moat is the switching costs are very high. If some company of their customer wants to switch to different vendors, it's very expensive for them to change to different platform than Twilio. For example, the super network which Twilio has built is very hard to replace. Also, switching to different vendors leads to a lot of disruption in the businesses. There's a risk of integration. There's a risk of loss of data and training of new training employees with the new software. It's very difficult task. So you can see that Twilio is a strong company with leadership in cloud communication platform as a service, and some of the big companies are already their customers. So let's have a look at their stock price and some of analyst ratings and see if it's a good entry point at this moment. So Twilio is currently trading around $314, and its 52-week high was $457. So it's trading around 30% from its recent high. So it has sold off quite a bit. But you can see Twilio has been beating estimates from last many quarters significantly, which is very nice. And financial is very strong. They have been consistently increasing their revenue as well as earning. You can see very exponential growth from $0.4 billion to almost $1.8 billion, which is very nice for the company. It commands 1.7, which lies between strong buy and buy. and very bullish analyst ratings from different Morgan Stanley, Jefferies, Wells Fargo, JP Morgan. Average analyst price target from 23 analysts is $466, which is almost 50% upside from here, which is very nice, with lowest price target of 350 and highest of 550. So Twilio, currently it's trading below its 50 and 200-day moving average, and RSI sitting around 44, which is close to neutral. And many of the analysts are considering compounded annual growth rate of 35% on an average until 2025, which is very strong forecast, and which is very good for Twilio. But there are also some headwinds for this company. Twilio has been expanding into international market, which should affect their near-term margins, as well as they have been trying to get enterprise customers on board, for which they have to build traditional sales team, which also should cause pressure on their gross margins. Moreover, a lot of network carriers, for example, Verizon has been increasing their fee application to person fees, which should also affect their margins. And there are many other competitors like Cisco who play in this space. So Twilio has been trading well below the analyst price target, and there's a significant upside, 50% from here, according to analysts. Since Twilio still has to show positive earnings, I like more margin of safety. For me, I'll be probably a buyer around 250 to 217 US dollar price range. Let me know your thoughts about Twilio and leave me a comment. If you like my content, please do subscribe to my channel, and I'll see you until next time. Bye-bye.